All right. Welcome, guys, to our live analysis session. Now, I'm a little bit late on. I do apologize for that. But let's get cracking on what's happened. So the dollar index has officially broken out, guys, like I spoke to you yesterday about. So remember this daily demand supply zone over here. You can see that the price stuck with the induction of the previous daily low. And we have a strong breakout today. And you can see, as I told you yesterday, if the body of the candle had broken beneath this supply zone, then we would be looking to go for a sell-off. But as you can see here, the body of the candle stayed exactly where it needed to be. The candle closed beneath, and then we've had this very strong push up today. So right now, you can see that the dollar has just been pushing. There is no gaps in the market either. It's just been kind of rallying since the beginning of the London session. Really 7:30 and into Asia, we had a quick reversal, but price has found its footing again. So right now, the price has actually started to push very strongly above, and now we're at 104. So guys, I told you that the dollar index is not done yet. And this last movement for the long, literally the last round of the dollar strength being bullish. After this, the dollar is going to start to crash down at a heavy rate. And I'm just really happy to see that the analysis played out as planned. Okay, now, if you look at the grand scheme of things on a monthly time frame here, you see that this supply flip zone where the price pulled back in here, this wick really was just really to fill out this area right here. Now, I call this a validation point, but this is also a monthly fair value gap. The price came to close this fair value gap before returning back to where it is. So in terms of a trade, this would have been, as I said, a pretty brilliant trade if you took it from here and rolled this all the way back up again. So this was a really, really nice example of price action on the higher time frame and the lower time frame. At the moment here, because of this liquidity gap being filled, I'm sure the daily candle is going to definitely close above this area to fill this gap. But my next target really I'm looking for is to at least get back to the highs of this year, which is about 105, 105, 500, just above, or 477, around that area. After that, once we break past this supply zone, I want you guys to see this. So as long as the dollar continues to, pile on the pressure and keeps on pushing long, what I'm going to do here is I'm going to drag this supply zone over here. Now, really right now, we're in a stage that if price breaks above this 106 supply zone area, if it breaks above here and continues going long, then what we're going to have is a very strong bullish run on the dollar from that moment on. And this is where the assets that are dollar denominated are going to begin to crash. This is where it starts from, the way it comes from, like you've been hearing me say all this while. So, with that in mind, you should be prepared to see what the price is going to do on these pairs. Now, I've been in the US 30 personally on my bot, really, because that's the main kind of that's the main trades that are going on. But ideally, this is this is in essence what the idea is for looking at price action. So based on that, once we break above here, the reason why I'm saying that we're on our way for a massive long is because number one, we have a liquidity void that doesn't end until 110. So in essence, from above this high, if you want to be more specific here, this is the last price reference point, as you can see here. The price wick to this swing low reference point before going short, right over here. But from this last reference point, which is about 107, 200 or 150, somewhere, 107, 366 to be exact, this area here. Once the price breaks up above here, we have, in essence, 3,000 or 300 points, or pips, or 3,000 points of just a liquidity void until here. All right, now this also, you could say so, this is definitely the main liquidity void, and I'm sure the price is going for that next. So in terms of the dollar strength, we're definitely on an uphill trajectory for the long run. And again, the targets that I have for the dollar index, I might have to use TradingView at another time to show you. But in the kind of midterm, what I'm looking for with the dollar index is, let's just get this out of the way now. I've got Zoom in the way to take this off. We have a supply order block all the way back in 2002. And you're probably thinking, why are we going for 2002? Well, in cycles when we have what we have right now, which is not hyperinflation, but we have very strong inflationary conditions. Unfortunately, but I guess fortunately, if you're a trader, institutions around the world, governments around the world who know this will take advantage of this opportunity to balance out old swing highs and swing lows and go back to old order blocks that haven't been completely efficiently dealt with or haven't had an efficient cycle of price in them. So one of those will be that supply zone that I'm looking at right here. And with that supply zone there, let's just grab this. I'm going to grab this properly. This supply order block all the way here. As you can see, when we had the highest point in price so far for the last, let's just say in the 20 decades, so from 2020 to now, this highest swing point in this decade has been at 115, at this area, 114,635. Now, I told you guys that on the lower time frame, there's equal highs, equal daily highs and relative equal highs on the daily for these highs right here. So I knew that in the future, one day, the price is going to come back and take those highs. Now, the speed at which the price dropped here has left quite a few liquidity voids. And zooming out, this 110 marker I have right here, the monthly version is a 109 marker right here of where the liquidity void for this candle ends, right? So what I'm looking for is the price to at least get to the 116 area. Now, there's still a larger unfulfilled efficiency here. Now, for me to show you this, I'm actually going to have to go to TradingView to show you this. So let me do it this way. I'm going to pull up TradingView and get the dollar index. Now, I already have the analysis on there because I believe TradingView has probably saved it on the cloud somewhere. So we can actually work with that and see what's going on. All right. So what I'm going to do is pull up TradingView here so that we can have a look at what's going on. All right, so let's take a look at this. So if we look at TradingView right now, I hope you guys can see. I like to keep my TradingView on dark mode. I prefer the look and feel of it. So let me pull up the dollar index on TradingView so that we can have a look. So let's go. I think it's already should be in my search options already. So DXY. Now for the DXY, I believe I use ICE to look at it. So let's have a look and see. All right, so let's see what's happening. All right, so on here, guys, I have markings already. So you're going to see some levels and some order blocks and stuff pull up. But let me just pull out my monthly view. Let's just get this to run. So let's go to the 12-month range of days and let's see what we've got going on. All right, here we go. So screwing this out a little bit and drag this to the left here. Just do this a little bit more. And a bit more. And a bit more. All right, so not too many heavy markets. I think I might have deleted some. But now, if we look at the dollar index on the 12-month here, you can see that we have a very strong bearish curve now. I think that this is not the one I use because there's more price information on the other one. So let me try and use TVC and see if I've got it on there as well. Okay, here we go. So I've got TVC marked out, which has a little bit more information going back to the 90s here. So I can take this off. Now I'm going to take off this line here. Just remove that all for a minute. Remove that. I'm just going to have a fresh chart so we can look at TradingView and see what we've got going on. Now, from the TradingView perspective here, on the weekly, on the 12-month situation here, one of the things is that we have long-standing unfulfilled efficiency, and we have an opportunity with this current market to fill it out. Now, the price wicked into here, and we had the price drop beneath here, but because of these equal highs was one of the reasons why the price wicked the way it did. Now, problem is, for the price to efficiently sell off, we have a very long-standing unfulfilled efficiency, which is even before, and let's just line this up properly, which is even before these swing highs here in 2002. All right. Now, if we were to go by fair value gaps and looking at validation points, as I call them, we have one right here that needs to be filled out. Now, in this case, the open and the, or in this case, the close and the low, sorry, not the open, is a bearish candle, would be the same. The low, because the low is the same, you could actually say right here that you have another gap in the price, in price delivery, where price was only offering one side of the market, right? So over here, 1, 2, 3. Now, because there's some highs above here, 2002, I wouldn't be surprised if the dollar reaches at least here. But what I'm actually looking for is the supply order block. I do think that the price is going to reach back to maybe 132. So that's why I'm saying that with the dollar's last attempt to be bullish, I think this is it, where we'll have this last leg of bullishness. It will fill out every last liquidity void. And then after that, we should be looking for strong selling. Now, the overall structure of the dollar index is bearish over time. And I mean, from the 80s, from one of the last crashes, major crashes, 78, 79, price pushed up to 164 from the 83. So it basically doubled in value. And then it was immediately met with a sell-off straight afterwards. So ideally, I do think that we have one more last run, historical run to go. And after that, the price should be making its way for some more, additional highs. On the lower time frame here, so this is on the scale that we have on MetaTrader right here. On the MetaTrader scale, when the price came to where it did, it stopped off at a very nice fair value gap over here, but it still left one out, which is just above the supply order block here, which is why I don't buy this one here. So at least at 117 at least. Now, if we observe the other candles here, let's just zoom in and take a look at this. Observing these candles here, there's still a bit of inefficiency. We have an open to, an open to close gap here, which the price will definitely want to fill out. Okay, that's one. And if I just zoom out a little bit more, okay, so to look at where we are. Now, another thing that's key here, which is why I'm convinced that the price is definitely not kind of done going here, is that we have liquidity gaps all the way along here, 131. Now, this is also based on fundamentals too. The fundamentals in this example do have to be in play, because depending on how quickly inflation, is curved or just kind of held back for another couple of years, through quantitative tapering, then that would also affect how strong the dollar would also be. So yes, there is a price action element, which is 90% of this, but there is a small part that the fundamentals can also have some control over what happens. So ideally, if we look at treasury market bond rates and bond yields, if we're seeing bond yields, increase or decrease, and we're seeing the dollar index also inversely increase or decrease with that, then we'll be able to see how far the price will go. Now, for me, from a technical point of view, I do think the price will go for that 1987 supply zone, fill out some of these liquidity voids and gaps, and kind of have an efficient cycle of price on the upside. Then that gives the price room for. Now, I do believe the dollar is going to need to die and have its kind of a major death or close to major death, or be dethroned, in fact, would be when the price starts to reverse the other way. So this is what I am actually personally looking for. All right. And I'm hoping to see what the price gives. And I'm excited to see. So this is really my conversation with you guys in terms of pairs. Now, if you've got pair suggestions here, we can take a look. Let's take a look at the charts again and see what we've got. Now, let's pull this up and see where we are. Now, for most part, I do think the dollar index still has more bullishness in it to go. So I'm expecting gold to continue going short. For example, we have a clear liquidity void, and we have such a beautiful structure here. I don't know why I didn't look at this again. Such a nice taking of the highs. The price even returns to supply one more time, and it's just giving out pips. Now, I wasn't watching gold, so yeah, so I missed that. But we have a liquidity gap going down here, so I do think the price is generally just going to really drop nicely. If you look across the board, you can see Euro USD is just smashing down right now. really smashing down. AD, USD, same thing. It's actually taking the low of last month now. So it's taking the low of August and September, but there's no order block here. So the price will definitely continue to push short. USD JPY has actually shot through the roof. And I think my personal annoyance is being with USD CAD because I was in here, but this annoying spike that came during the NFPs stopped me out. I was going to swing it through until next week. And I had 2 lots on here, which would have given me, I believe, like about 3K profit. So that has been annoying. I'm not going to lie. That was an annoying one, really annoying one, but it's fine. It happens anyway. As I said yesterday, I didn't regret it. I'd rather keep my stop loss to break even and get stopped out during the NFPs and leave in peace rather than being stopped out, 10 times more than my stop loss, because that definitely can happen. All right. So, moving forward from here, let's look at the rest of what we've got going on. All right. So you can see that the dollar strength right now has really burst through, and you can see a very big increase in some assets. Now, in assets across the board, let's look at stuff like Bitcoin and stuff. They haven't really started to react to the weakness of the dollar the strength of the dollar just yet. But I do think that there is a big delay sometimes between Forex and crypto. So sooner or later, these will have their moment and start to push down as well. But we're coming into that time, guys, where the dollar is going to artificially raise its strength to kind of keep itself afloat for this last couple of years, So all I can really say is that in terms of trading right now, so much great trades going on. I just think it's more of a situation of, I think it's more of a situation of what to pick. Now, I personally wouldn't try to jump into the market. I actually have my bot on today trading for me, and I'm up about $400 across the board roughly. So I'm a happy guy right now. Things are moving really smoothly with the bot. Yeah, I'm up for about $100 here. So yeah, about $400 across my accounts. So I'm feeling good about myself right now. For now, guys, I would say just kind of step away from the market if you can. If you find a cross pair that's doing something that you like, you can go for it. I mean, AD CAD has just literally just been dropping since yesterday. Like no warning almost. There was a little bit of a warning. I said exaggeration to say there wasn't. There was this kind of induction right here. And then we had the return into supply, similar kind of shape to gold, and prices dropped. But again, for now, people, I would heavily suggest just try to stay level-headed with the market. We have Canadian dollar news tomorrow, which is my focus. And I just want to see what the Canadian dollar is actually going to do. At the moment, CAD Japanese yen, it didn't actually follow through and fill that liquidity gap that I was talking about on the 30-minute here. But what it has done, that might be a great sign for a potential trade. I still think that CAD Japanese yen is a bullish move, but we have this fair value gap D1 validation point, whichever you prefer to call it. And on the H4, the price has come for many of these weekly highs. There's about 3 weekly highs with each other right here. Now, if I was to mark this out, we have one here. This is the furthest back. And then we had another one over here. Let's bring that over to the question. And then we have this over here. So we have 3 weekly highs that have just been ran. And I think that I wasn't not expecting the price to take the highs, but it's just that the speed at which prices moved from where it could have gone to as, taking the highs, pushing down here and then going long, is actually done it in the reverse way. So we've had a very strong run, and there's a lot of buy stop liquidity above these highs. So now that a lot of the buys have been offloaded, this is where I'm thinking that we might get a cheeky sell. We don't know for sure, but I would like to see when the price reaches to this exact D1 validation point fair value gap area here and see what the price does with that. Because in the same hand, the price has actually taken the high of the previous month. I still think that the trend is bullish, to be fair, but we'll have to see what happens tomorrow. I mean, with the Canadian dollar news, anything can happen, really, but I would like to see a little bit more evidence from the price. I personally think the price is most likely going to still push low, probably close out this gap up here and take these highs, because there's quite a few highs to go for, and just give us a more explosive low. But we'll see very soon. Now, on the reverse side, now with pound CAD and others, there are different ways to compare, currencies. Pound CAD, not pound CHF, pound CAD. There we go. So with pound CAD, we've had a nice short whilst CAD Japanese yen has gone long. And looking at this, I can see that there's many lows that the price would definitely want to target for. I mean, some of the more obvious ones is we have, let me just put this here. Yeah, we have, yeah, we've got this weekly low is not the low of the week, but it is a weekly swing low. And then we have another one here. So we have these two weekly lows, which are the low of both weeks, while right next to each other. So they're relative weekly equal lows, which is a very strong amount of liquidity that will be available there. So we definitely would like to take advantage of that and see what the price has to offer, concerning that. So ideally, this is what I'm expecting the price to offer us. And if it is going to continue going short, well, the initiation for the short has actually already happened. So it wouldn't surprise me if the price, makes some more lows on the way down. Okay, now because most of the news is CAD news, this is, if you're wondering, why is he talking about CAD news when the dollar's going crazy? Well, because there's Canadian dollar news tomorrow, which is the interest rate decision, there's probably hundreds of, I'm not joking, hundreds of different trading style opportunities that you can grab from the Canadian dollar use and take use of that volatility. Now, it looks as though the entries have already happened today for some pairs, because we've got the price took this high right here. We had a really nice market structure breakdown here, return and short. Okay, so some of the entries are kind of like pre-down already, and it looks like the price may just follow through and continue. Now, definitely with EuroCAD, I'm confident the price will continue going short, which means that we're going to get a stronger Canadian dollar, and we'll see what happens. Now, at the moment, the interest rate for the Canadian dollar is 4.1%. And it looks as though across the board, it looks like there is a rate hike pause at the moment. But in the eventuality that there's a surprise rate hike, and we can actually check this out. So if I go over here and I go back over to where we are, I'm just going to go to FX Street really quickly for you guys to take a look at what we've got going on. All right. So then on this second part here, let's have a look. So if we look at the Australian dollar news today, let me just go to today. So you can see over here with the Royal Bank of Australia, they kept the interest rate the same, which is one reason why that's helped the Australian dollar to kind of push short, because I'm sure investors were expecting the interest rate to hike to kind of fight inflation a bit more. But since they've paused the rates, it's given a bearish tone to the Australian dollar, which has added to the strength of the dollar coming in, pushing the Australian dollar, US dollar very strongly short, same as NZD USD. Now, since they paused their rates, most likely the Canadian dollar will do that, but it may have a different effect because Canada's economy operation is very different in nature from Australia and other countries. So I'll be interested to see what's going to happen with their interest rate. Now, if you want to see the expectation here, the Bank of Canada's interest rate, sorry, is not 4.1, it's 5%. That's Australia. So if it stays at 5%, which previously, if you remember, they were talking about rate hike pause, and that was at 4.25%. But now we're getting to 5%. So numbers that haven't been seen in literally 10 to 20 years. What you want to do at that point really is to check out and see what's going on. All right. All right, so scrolling through, looking at Thursday to see what's going on. And then Friday, I want to see what the price is offering, on these days, but we'll wait and see. We have quite a few things to see for the week. We also have Canadian dollar interest rate news, which is going to be another thing. But hopefully we'll get some good results from this, guys. So kind of that's my piece for today. Tomorrow I'll be looking at the news before it comes out, so I'll try to be on live a lot sooner. Okay, but yeah, definitely we will take a look at what's going on, people. So I hope you guys enjoy this. If you're in trades, well done. I'd like to see the comments of what trades you guys are in, and I'll catch you guys later.